Hello, everybody. Hold on one second. I wanted to bring over my Dano Goche that I'm drinking right now. This is number 28, which was purchased 2 years ago, I guess the summer of 2020. And it was part of a small batch that sold out almost instantaneously. And it's delicious. And no, I have not been drinking all day. I just poured this right now, though 1 o'clock is usually about the time I start on the weekdays. On the weekends, maybe a little bit later, because I'm a little more involved with the kids. I got 6 of you here. Excellent. 7 now. I didn't really care how many show up. I just wanted to get it in a video format, and it's better to do it live than pre-record it, so I can at least answer questions. There's a lot to cover here, and this time I took notes. So often when I get done with one of these, I immediately realize I left out a bunch of stuff. That was the reason why I started doing these YouTubes in the first place, was because with BMYRT, we did the podcasts, Daniel and I, and then the next day I had more to say, and I thought that it was different than what I said on the podcast. So I that's why I created the YouTube channel, was to talk about BMYRT. So I have more to say about Kohl's. Magnachip had an article on Friday, so we'll talk about that. But we'll mostly focus on Twitter. So as everybody knows, of course, on Friday, Elon Musk issued an 8K with a letter from his lawyer that said he was terminating the Twitter deal. This follows a Washington Post article the night before that said he had basically stopped cooperating or talking to investors to finance the deal. So it was kind of a preview of him signaling the formal termination of the deal. As I've said many times already on this YouTube about Twitter, I thought that it was far more likely than not that he would eventually file suit. I think I put it at, as recently as this week, maybe a 10 or 20% chance they would do a price cut before a filing, and then an 80 or 90% chance he would legally terminate the deal and it would go to lawsuit. The stock fell 5% on Friday on the Washington Post article, and then it fell another 5% on Friday after hours on the filing. So it's traded like 35.04 at after hours, and it was whatever it was, 37 or something before, and 39 the day before that. What's most interesting to me about the last 2 days is, and I don't expect the mainstream media or the press to get any of this right. It's more the financial community that seems to think something dramatic has happened. That's game changing to the story for any ARB that's owned this in the last 6 weeks. When the stock's trading at $37, $38, $39 since May, it wasn't pricing in the likelihood of even a $45 or a $47 price cut in the near future. If you do an expected value, it's extremely low of what the market was implying were the odds of, I have wine on my teeth, but the market was implying that this would be resolved before a lawsuit. So just to give you some simplistic math, let's say they were going to do a price cut to $50 and it was trading 37 or 39. Well, I'll use 37 because that was what it was trading at before he filed to terminate. That's $13 up, and it fell, about $2 in the after hours. So it's 13 up, $2 down. Now we actually know what it went down. It went down $2 on the filing. Maybe it went down $4 if you include the Washington Post article. And that basically tells you that it was pricing in an 80% chance or so of. I'm being distracted by stuff in the background. Hold on one second. I can't focus. All right, sorry about that. It was my wife was on speakerphone talking to somebody, and it was going in my ear. So the market wasn't pricing in a big percentage chance of this being resolved, right? If it's 2 down, 1 down, 3 down, and it would have been 13, 14, 15 up, clearly this was the implied outcome, which is down. I didn't think, and I still don't think it's going to go down much on Monday, because I thought that this was the event that everybody's been waiting for. Arb has been waiting to make it a full position once he files, and you also have people that were short, I guess, thinking that this was the likely outcome, which is a lawsuit. I know of one person that was shorted into this lawsuit. He's on Vic, so he posted publicly about it. But anyway, that's what happened. Let's go line by line about everything. There's lots to cover here. I bought a lot of stock on Friday, so it was like a 6% position going into Friday, and I doubled it to 12% Friday during the day, and then I tripled it in after hours to 34 or 35%. So I went, I guess, from 6% to 35% in the course of 24 hours. And was it the right move or not? Well, we'll go through how you analyze that towards the end about what I think the price should be today. But let's just do one thing at a time. So let's discuss the filing. So first of all, Matt Levine is the best, as you all know. I've talked about it before. There's no reason for me to cover things that have already been covered. But the 3 points of his filing are bots. That's number one. Number two, that Twitter was negligent in providing the information that Elon requested to close the merger agreement. And part of the contract says that he needs, full access to whatever Twitter has to, get his financing and ordinary course of business or whatever. And he says that they stopped replying to some of his requests, and or it was insufficient what they responded with. And then the third thing he says, that they fired some employees and some employees quit, and all those things should have been done with his permission or knowledge. And as a result, they're a breach of the merger agreement. So I'm not going to waste any time on this. All three of those are like complete bullshit. There's no legal argument for any of the three. Okay. But anyone tells you differently, there's lying. Nobody's involved on the short side or on the sidelines here because they think Elon Musk has a good argument for getting out of this deal, right? There's been no material adverse event. The BOF thing has been talked about many times already. It's all bullshit. Doesn't mean anything. The other two mean nothing, right? They purposely overloaded Twitter with information requests and things that are completely unrelated to the closing of the merger, so that they could then throw in a few lines into this agreement, into this filing that says that Twitter did not fulfill their obligations under the merger agreement. They even added a line in the 8K that said they might sue for Twitter's financial performance deteriorating, which is the funniest of all of them, because the most common carve out in a merger agreement is you can't get out of a merger if your business has deteriorated in lockstep with other companies in the industry. So whether it's war or recession or whatever, as long as you haven't disproportionately gotten hit versus others in the industry, you can't get out of the deal. And I mean, like, really disproportionately. They'd have to prove that something happened with your business that's business specific, that's not a 5 or 10 or 15% delta to the others in the industry, but 50% kind of thing. There's only been one merger that's ever been ruled by a Delaware judge that has let them not have to close the deal through specific performance. And that company, Acorn, went bankrupt within, I think, months of that deal breaking. So the company, I was involved in this. Of course, I was involved in this. Fresenius, I think that's the name of the acquirer, was going to pay $36 a share for this thing. By the time the lawsuit came around, the stock was trading at $9, $10, $11, $12, I think. I can't even remember. By the time the judge was seeing it, it might have been a little higher, $15. And then it went to zero within months. So basically, if the judge ordered that to close, they'd be ordering Fresenius to buy an insolvent, bankrupt company. And there was fraud there and all sorts of stuff. That's it. That's the only time there's ever been a company that's been able to get out of a merger deal. So put all that aside. Okay, that is not the story here. People want you to think that's the story, not the story. It has nothing to do with any legal technicality that Elon Musk and his lawyers could find to get out of this deal. Okay, this is all game theory, basically, and then also trying to figure out the incentives of all the players that are involved. Okay, those players that are involved are the Twitter board of directors, Elon Musk, and the Delaware judge that's going to see the case. Okay, and each one of them, we'll discuss in detail. So I have so many questions here. I guess I should, I don't even know what right order to go in, but I'm just going to take the questions I have or the notes I've taken and just going to go and kind of, it might not be in a smooth order. Okay. First question I got was, can Elon sell his stock? Is he going to sell his 10% position in Twitter in the open market on Monday? First of all, he can't. Okay. Elon's filled with material non-public information. He's been involved behind the scenes with Twitter since the day the merger was announced. And he might even be privy to their financials on a weekly or monthly basis. Like, it just depends on how much information they're sharing with him. And he's not legally allowed to sell a stock. He's the equivalent of an insider or someone that's on the board of directors or CEO, whatever. And I don't think he can even sell the stock in a window. So if they reported earnings, he's still, I would guess, still locked up until the lawsuit's resolved. He's still privy to a contract. He says he's terminating the contract. Contract still exists. He still has that material non-public information. So if there was a time he could sell it, it would be after a window opens for other insiders when he's no longer holding material non-public information. That said, he will not sell his stock, okay? Bar none, no chance not selling the stock. And I'll tell you why. There's a 80 to 90% chance that this deal is going to close. And it's going to close at a price much higher than $35 a share. If Elon sells his stock, it's going to cost him an extra $1 billion or $2 billion to finance the deal, right? It's not in his interest to have to buy 100% of Twitter versus buying 91 or 92% of Twitter at the agreed upon price, whatever the price ends up being. So there's no chance Elon's going to sell his stock. I'm certain of this. He can't legally, and it also would hurt him if he did, because it will cost him more money to eventually acquire the company that he's going to end up acquiring, okay? The next question I've gotten many times. Elon gets away with everything. He's bigger than the law. Why is this going to be the thing that stops him? Okay. Elon has always flaunted the law. He's larger than life. He doesn't believe in the law. Why this? Why now? Okay. So the things that get quoted often are the SEC case with the buying Tesla at 420 and settling with the SEC for $20 million. And then still tweeting crap that the SEC hasn't enforced after the fact. People bring up the pedo case where everyone apparently, I'm not a Tesla or Tesla Q guy, so I've never cared about Elon Musk until this event. So I don't follow Elon news that closely, but I did know about the pedo case, and someone said, well, he didn't settle the pedo case. That went right to trial. And someone said he didn't settle the Solar City case. That went to trial. These things are so different than this, okay? So I'm jumping around. So the first thing you have to understand is if you believe that the judges in the Chancery Court in Delaware, that one of them could be ultimately biased, maybe they're super MAGA or they have some sort of affinity for Elon, and they are not going to follow the rule of law because someone actually said this to me because we live in a Trump world, the Supreme Court overturned Roe v. Wade, whatever, that the rule of law doesn't really apply anymore necessarily. You obviously cannot own this. Okay, can't own this if you don't think the rule of law is going to apply. Though I only think there's a 20% chance this gets to trial. So why do I think that? I'm going to get to that in a second. Now, if Elon never wants to settle, people say, well, he didn't settle the pedo case. He didn't settle the Solar City case. Why would he settle this? Okay. I can give you multiple reasons why he would settle this. Now, the really difficult problem for Elon Musk is Elon Musk wants to own Twitter. Okay. I want to own Twitter. Okay. Elon Musk doesn't want to spend $44 billion to buy Twitter. That question has been asked over and over again. Does Elon Musk really want to own Twitter? They compared to LVMH and Tiffany, and LVMH really wanted to own Tiffany, and they were getting a good price for it at the price that was agreed upon. Okay. So the difference between this and that, people say, rightfully, is that LVMH and Tiffany, first of all, Tiffany was a rounding error for LVMH, but also LVMH really did want to own it. Okay. I am under the assumption that Elon Musk does not want to own Twitter at $44 billion. You know why I'm at this assumption? Because he just terminated the merger agreement to buy it at $44 billion. Now, there's a chance he still does. He does want to buy it at $44 billion. And he's just fucking with everybody and seeing if he can get a price cut. Okay. But I believe he actually doesn't want to buy Twitter at $44 billion. Would he buy Twitter at $1 billion? Yes, he would close tomorrow. Would he buy Twitter at $5 billion? Yes, he would close tomorrow. Would he buy Twitter at $10 billion? Yes, he would close tomorrow. Do you get my point? This whole concept of trying to understand what Elon Musk wants and what he doesn't want is completely missing the point here. Okay. His incentives are getting this price to the lowest price he can because he will lose in court. Okay. I'll repeat. He has one goal and one goal in mind. It's to get the price down as low as he can because in court, if it goes to a verdict, he will lose. And he knows this and his lawyers know this. And so far, this, even though the press is making this out to this huge deal, everything he's been doing for the last 6 or 8 weeks, he hasn't really done anything, right? I mean, he's paying tens of millions of dollars in lawyer fees. So maybe when this is all said and done, let's say both sides spend $100 million on lawyers, which I think is a ridiculous amount of money. I don't think it's going to be that much money. But let's just say it's $100 million on both sides. And Elon, and so that's $200 million. And Elon either ends up losing the lawsuit, so that's $200 million he just cost himself on a $44 billion deal. It's a 0.5% of the cost of the deal. It's irrelevant. Okay. Let's say he gets a $4 billion price cut, which would go from $54.20 to whatever, to $49 or $50 a share. Okay. He just saved himself $4 billion. It cost him $200 million. Okay. Really good return for him. And let's say there's a 5% chance he wins in Delaware. There isn't, but I'll tell you the only way he could win in a minute. 5% chance he wins in Delaware. Well, now we just saved $25 billion because the fair value of Twitter today is probably around $20 a share, $25 a share, right? People can argue about what that fair value is. And I would say $20, $25. I'm hearing my family in the background. So it's an easy decision for him to litigate. Hold on one second. I can't do this. She forgot. Loud Russian speaker, and the walls are thin, and I can't hear myself think. So it's a good risk reward for him spending the $200 million. Is my point. You do the olive tree of the different things he might get out of this, whether it's $1 billion, $2 billion, $5 billion price cut. He might get out of it completely. Any way you look at it, he's just harming his reputation, and he doesn't care about his reputation. He's a narcissist, and this is hilarious for him, right? I mean, he's never going to buy another $50 billion company, and if he does, they'll just put more protections in it next time. So he doesn't have any harm from doing this. He loves this, okay? So how does Elon lose the lawsuit? And then we'll get back into why I think he settles. But how does he lose? How does Elon win in Delaware? So the two things I've heard the most, the three things, I guess, about how you can lose this ARB. The first one is that the board of directors decides that this is too much of a distraction and the business is plummeting and they need to negotiate a settlement with Elon so that they can save Twitter as a brand and a business. In the same token, the board of directors doesn't like Elon, didn't want him to buy this in the first place. They look at Twitter as kind of a town hall, and they're happy to not have him own it. So they decide, let's just move on from this. It makes sense. It was just announced an hour ago. They hired the best law firm in the country to defend themselves. Just came out an hour ago. You could find it on Twitter if you search for Twitter. I could send the link in a minute. So they would go full steam ahead with a lawsuit. It says in Bloomberg they're going to file the lawsuit early next week. And I'll get to timing and all that stuff later on in this video. But they would still be doing the same aggressive move towards a lawsuit, towards a trial, even if they were planning on settling eventually. Now, that settlement could be one of two ways. It could be a lump sum payment, or it could be a price cut, okay? I'm not including a price cut as a loss for investors. If they get a price cut, we're going to be fine. But let's say that they settle for $2 billion or $3 billion, okay? Which leads me to something else that's been, falsely said over and over again in the press. It's starting to become a little clearer, but Elon Musk can't pay $1 billion to get out of this, okay? The $1 billion is only in a few specific situations, which is a government blocks the merger, the financing falls through, and I think that's pretty much it. There might be one or two other reasons. You can't have a regret and pay $1 billion to get out of it, okay? This is not my opinion. This is a fact. So that $1 billion is irrelevant. Now, Elon and the board can negotiate whatever they want to negotiate to terminate this agreement. It could be $5 billion. It could be $10 billion. Now, do we really think Elon Musk is going to pay a $5 billion fine fee to get out of this? It would be a better move than closing on it, but I don't see him doing it, okay? I would think the most Elon would ever pay would be maybe $2 billion. And I can't see the board of directors agreeing to take a $2 billion jack on a $44 billion deal. It's just 5% of the market cap. The stock would plummet because the stock today is probably worth, like I said, about $20 versus the $54.20 he's paying. But there is a risk there. There's a risk that the board decides that this is all too much and they're going to move on, okay? The second risk is that a judge, not the MAGA risk that the judge just rules for Elon's favor because, they don't follow law, but there is a real risk that the judge, after siding for Twitter, is worried that Elon, A, might not follow through on their order, or B, just it feels weird for the judge to order an individual to close on a merger, especially when he doesn't even have the cash to do so at that moment, okay? So instead, maybe the judge fines Elon the $1 billion termination fee and lets him out, okay? I cannot overemphasize enough the harm that this would do to merger law if a judge let Elon out of this contract, okay? I take the opposite view. So the cynics say you have to let Elon out of the contract, because if you don't, then Elon's not going to close on the contract, and then there's no law anymore, because there's no way to force a guy to close on a deal. So if you tell him to close and he doesn't close, then the court is a joke, and no firm will ever have to close again. Okay, I argue the opposite. If they let him out of the contract, then there'll never be a merger contract again that means anything, because it sets a precedence that says you can just say you don't want to own anything anymore. This wasn't done based on the fact that something actually happened. There's no basis for Elon getting out of this deal. None. Okay. Which is why I'm convinced it'll never get to trial, because his lawyers can't argue anything in front of a judge. There's no arguments to be made. So if his lawyers know that and Elon knows that, then what he's trying to do is get as close as he can to a trial to then get the biggest price cut he could get, right? Because right now the two sides are miles apart on what the right price cut should be. Okay. Twitter would probably be okay with a $2 price cut right now, which is, by the way, extremely immoral. He should get nothing, right? If I buy a home and I agree to pay a certain price and I get to within a day of closing, and then I back out of it, and somehow it's economical for me to then drag this through court and make the person not be able to close for 6 months, and they need the money for their new home, whatever, and then they agree to cut the price by 2% to get me to close, just because I was successful in that 2% price cut doesn't make it moral or ethical, right? So what he's doing is neither moral or ethical, but he doesn't care. As far as he's concerned, this is just all business. The problem is that Twitter would probably cut $1 or $2. Elon wants to buy this right now at $42, $45, $41, whatever. 40 to 45. I think Elon would be fine with 40 to 45 right now. Okay. It would eliminate a lot of his funding needs, and he would close. They are not going to bridge that. Let's say Elon's at 45 and the board is at 53. The odds of that getting bridged anytime soon is very, very low. Okay. So Elon's going to go as close as you get, I would think, to that trial date. And the closer we get to that trial date, the less likely the board is going to accept a very large discount, because they're going to be closer towards winning something that they're certain to win. The reason why Elon is going to settle is that the overhang he has in Tesla stock, and the fact that he currently has a funding gap of 10 or 15 billion he needs to plug. If we got near a trial and then a verdict, and he hasn't raised that 10 or 15 billion dollars, what do you think that's going to do to Tesla stock? And the whole thing he's been trying to eliminate from happening is Tesla stock going down under the uncertainty of the funding. So it's in Elon's interest to get to as close as you can to a trial, but not the day of the trial, to extract the largest price cut he could possibly get out of Twitter, and then to settle. Because the alternative is a complete loss. And it's not like the pedo case where he lost whatever, a few $1 million. I don't know what it was. This is $44 billion. Okay. He's very rich, but he literally can't fund this. Okay. This is not the Solar City case, which I guess would have been for a few $100 million. I don't even know what that is. I don't know how anyone can compare those trials to this. Someone worth $200 billion can bring everything to trial at all times. Of course they can. They think they're going to win, like Trump, and they're going to spend all the money they have on lawyers to make it as hard as they can on their adversaries. This doesn't help him do that. He's going to lose in trial. So when he loses, he pays $54.20, right? There's no discount then. And then on top of that, he has to see what happens to Tesla stock that day. What do you think happens to Tesla stock the day the judge orders him to close at $54.20? It's going to plummet, right? And then for the other cynics that say after he loses, well, then what happens? What if Elon just says, I'm not doing it? Are they going to throw him in jail? He just doesn't have to do it. I mean, people really are now under the belief that he is truly above the law, any law, and a parking ticket and the SEC are all the same thing as a merger agreement for $44 billion. And that's the world we live in now. There's no rule of law, they think. And sadly, a lot of it's true. But Elon Musk is the CEO of a publicly traded Delaware-based company, Tesla. Those judges have a ridiculous amount of tools to get Elon to close the deal. They could fine him $100 million a day until he closes. They can confiscate his assets. He lives in America. It's a state in America. Nothing like this has ever happened before because corporations follow what the Delaware courts tell them to do. But I can assure you that that won't be the outcome. A judge says close, Elon says, fuck you, and nothing happens. He just doesn't close Twitter ever and doesn't have any financial ramifications. I'm not saying he gets thrown in jail, but judges don't like to have their ruling disobeyed. And I'm pretty sure that there's what other cynics told me. He lived in Texas. Texas doesn't have, Texas won't follow through with the Delaware order. Tesla is a publicly traded United States company, Delaware based. It's not based in, it might be headquartered in Texas. That doesn't matter. I'm guessing that Tesla is a Delaware based company like every other Fortune 500 company. But anyway, Delaware has a ridiculous number of options to force him to close by fining him, by doing whatever. So I'm not worried about Elon flaunting an order once he's forced to close. Okay, let me finish the questions I've gotten, and then I'll try to wrap it up. I've already gone 30 minutes. What does the other one? I already did that one. Drew, Elon, understand that. How long will it take? Okay, this is another one everyone gets this wrong. Okay, this won't take years. In fact, just yesterday in an article on Reuters, a source close to Twitter says they think this could be done in a matter of months. And I would think that that this would be expedited very quickly. So with LVMH and Tiffany, that I think was a September lawsuit, I believe, either end of August or September, and the court date was in January. And that was in the middle of COVID, heart of COVID. So October, November, December, January. It took 5 months for the court date to come. I think it was the beginning of January. Okay. In this situation, this is such a fragrant thumbing the nose at everything that Delaware law and mergers stand for. I would think that a judge expedites this to such a degree that you could have a court case within a matter of months, or 2-3 months. I really do, because if you want to look at it from a political basis, look at this like from an election day, right? If we held elections in 2024 and states just don't certify the electors based on what the popular vote is in that state, because the legislature that's in charge, aka Republican legislature, decides that they don't want the Democratic electorate sent to the Electoral College, elections don't matter anymore. There's no elections anymore. Basically, we're wasting our time doing elections because they just don't matter. They literally are, it's a matter of public, right? Exactly the same thing here. If he is not forced to acquire Twitter at $54.20 under the terms that he agreed to, then contract law doesn't matter. There's no Delaware anymore. There's no Delaware courts. There's no merger case law. Everything that's ever been decided over the last 50 years gets thrown out. And it's in Delaware's best interest to forcibly come to a conclusion on this, to dissuade anybody to ever try to do this again. And this is simply a case of buyer's remorse. And if the stock market went up 20% after Elon bought Twitter, do you think Elon would pay more for Twitter after that? Do you think Twitter would have went to a lawyer and said, can we file a SEC filing and say, we no longer want to sell to Elon, the stock market's gone up a lot, and you owe us more money? Because that's all he's doing. He has a buyer's remorse for whatever reason. People like to come up with all these different reasons why Elon is doing this. He got bored. He realized it's too much work. No, he just paid too much. He's paying too much for this. And he doesn't want to have to sell any more Tesla stock. And his Tesla fanboys are very upset that he's had to sell Tesla stock. That's all this is. That's it. And he's probably also bored with it. But the stock market plummeted. And he doesn't want to pay $44 billion. And I don't care what his intentions are anymore. All I care about is the court rational, and will the board be rational? If the court will be rational and if the board will be rational, then we win and we'll make 54-20. Okay. If Elon is rational, he'll settle before the court case. He'll go as close as we get to the court case because he'll want to get as much money as he can, and he'll settle before the court case because he won't want Tesla stock to plummet, and he'll want to save a few $1 billion. I'm not banking on Elon being rational. I'm just banking on the board being rational, which they've shown every intent that they're going to be. And I'm banking on the judge in Delaware being rational. And I have no reason to believe the judge won't be, because that'll be the end of Delaware law if they're not. The other thing we need to talk about, because there's some guy on Vic that is obsessed with the banks and the financing. He thinks that the business has plummeted so much that the banks will walk from their $12 billion financing commitment. And that is a legal reason for Elon to get out. If the banks refuse to fund the debt commitment, and they do so by saying that the company will be insolvent if they close the deal the next day, then Elon can walk. And my response to that is it's ludicrous. Okay. This guy in Vic was saying that the company was insolvent weeks after they signed the merger agreement. They signed the merger agreement at the end of April. Elon had a change of heart the third week of May. And this guy in Vic thinks that from that moment on, the banks had a right to terminate because of what happened with social media stocks and with their underlying businesses. Okay. There have been multiple deals in the last year. Zendesk just got signed. Anaplan was just signed. These are extraordinarily highly levered deals. Okay. And the banks that signed this deal knew what the leverage ratios were when they came into it. And I am certain that Twitter is cutting the costs the way they have to cut them to make sure the cash flow will be the same or similar to what it was when the deal was signed. I will repeat, there will be no cash flow issue at Twitter. They have tons of fat to cut. We already know they're already halting hiring and they're laying off some people. And they will make sure that their cash flow has not been impaired from the end of April to when this deal closes, whether it's at the end of this year or if it goes a little longer to the beginning of next year. The banks, if they decide to walk, will then be privy to another lawsuit, and they will be part of the Delaware lawsuit, because the banks also are bound by the same contract. Okay. They would have to convince a judge that the business is insolvent if they close. And I am confident that Twitter will manage their business appropriately to where it can afford the $12 billion or whatever it is, $14 billion in debt that was put onto the business. So that, to me, is a non-issue. Okay. I think I covered pretty much everything that I wanted to cover. I'm going to start taking questions. I said, Jeremy asked about, I said, I wish that the options market was open on Friday, because I said I would love to sell $30 puts, August $30 puts on Friday afternoon. And he said, why would you want to do that? You know, that's limited upside, capped upside, and max downside. The reason why I'm interested in selling some puts in Twitter, possibly on Monday, is that I don't see a resolution here anytime soon. Okay. I explain why. I think the bid ask between the two parties is extraordinarily high. And first of all, you still need a shareholder vote before you can even close this deal. There might be some other regulatory stuff still. I don't think there is, but you might still need a UK approval, but I don't think you do. And then CFIUS hasn't commented about what they think about having Saudi Arabia involved and so forth. I think the regulatory side is over, but you still need a shareholder vote. You need the SEC to bless the proxy, and you need a shareholder vote. They're not going to agree to a price cut until after the shareholder vote happens. So I think August is a very a good time frame to where you can sell options and you're going to capture the premium, and not have to give up the upside if they sign the deal. Okay. So that's the reason why I think selling some out of the money puts might be interesting. Let's talk about what Twitter should be worth at today. Okay. This is the crux of it all, right? What's the right price for Twitter today? You have to look at a few different outcomes. Okay. So I think that there is, and I'll do it with you while I talk. Okay. I think that there is a 10% chance that the board terminates the deal and agrees to some sort of settlement, a multi-billion-dollar settlement. Okay. Board terminates, 10% chance. Okay. I think there's a 10% chance that, hold on, let me do this right here. I think that there is a 65% chance that this settles before trial. I think that there is a 15% chance that they win a trial. Twitter wins a trial. And then I think there's a 10% chance that Twitter wins a trial, but the judge only orders Elon to pay $1 billion. So in those odds, there's a 20% chance this breaks and Twitter gets between 1 billion and a few billion. Okay. There's a 65% chance this settles before trial. And there's a 15% chance that they get 5420 at trial. I think those odds are pretty fair. Okay. The biggest delta, of course, is the settles before trial. If it settles before trial, what does it settle at? Does it settle at 45? Does it settle at 50? Does it settle at 53? Okay. And it's hard to do an expected value on that wide range of outcomes. Okay. I think, and I'm very confident about this, that the lowest the board would ever cut to before going to trial would be in the $47 to $48 range. Okay. And that's my worst case scenario, the 47 to 48 range. Okay. Because they'll just go to trial. I don't see them giving any more than that at any point. I think it's far more likely the board cuts to the $49 to $52 range. And I don't see Elon agreeing to anything that's above 52. I think I'll probably go to trial if it's above 52 and lose. But his ego won't understand it, you know? So let's use $50 as my expected value for a settlement, because I think that's probably the right number. Okay. So in 65% of the time, you're going to get $50. In 15% of the time, you're going to get $54.20. And then 20% of the time, you're going to break, but you're going to get between $1 billion and $5 billion in cash. Notice I have no odds at this breaking and nothing is paid to Twitter, though $1 billion is pretty much irrelevant. But we're going to use $1 billion as the worst case scenario. Now, reasonable people can disagree about what Twitter is worth if this breaks. Okay. I'm going to use $20, and I'm going to include that with the $1 to $5 billion fee they might get from Elon. At $20, by the way, it's like a $20 billion company, something like that. No, it's less than that. It's less than that. It's like a $15 or $17 billion company, I think. If it's 44 billion at 54, then at $20, it's like 18 billion or 17 billion. They're going to get 1 to 5 billion in cash. And I think that number is too low. Okay. We kind of lose sight that Twitter still has this property that's poorly run and under monetized and has a huge, gigantic moat. Okay. This is not Snapchat. Okay. It's very, very hard to replicate what they have. Pretty much impossible. And it's a good business. If it went to $20 in a year or two, you could definitely have someone buy it for $30, which would be a 50% premium to $20. Okay. So I'm not going to waste time in trying to come up with the value of Twitter if this breaks. $20 seems fair to me. Fair to me in a conservative way. Okay. So 20% of the time it's 20. That's worth $4. 65% of the time it's 50. That's worth $32.50. And 15% of the time it's $45.20. That's worth $8.13. If you add up all of those together, you get $36.50. You get $44.63. So my fair value of Twitter today is $44.63. And I was going to say it's the low 40s. I think it should be trading right now between $40 and $42, not $35. Now, does that sound like that's a big difference? It really is when you're doing merger arb. 35, 36 versus 42 is a gigantic spread. Okay. And I don't even think there really is a 20% chance that this deal won't go through. But I use 20% to be conservative. So I think fair value today is $44.63. And that's why buying it at $35 is very attractive to me. At $35, assuming it never, well, we might as well just assume it goes to court. Because if you assume that they're not going to settle, that's $20 up, $15 down, and the market is saying there's like a 40% chance of this closing. And of course, I think it's way higher than that. So I'm going to start going through questions now because I think I can't believe how long I've talked already. 47 minutes. Holy cow. Please compare the attractiveness of this versus TIFF. That one's really easy to me. So this is a much larger spread. Tiffany was a much smaller spread. It was like a 15 or 20% spread. This is a 50% spread. Tiffany was a corporation. LVMH was a corporation buying Tiffany. And the guy wanted to own it. He really wanted to own it. Okay. On the flip side, people were worried about this fake French letter that he showed that says that they weren't allowed to legally buy it. The letter was complete bullshit. I thought it was bullshit the whole time it was happening. Anyone that knows me knows I believed zero of it. And they had no case either. Okay. They thought hopefully COVID would be this weird thing that the judges and the courts might differ on case law with because it was a new thing. But they had no case. But that's a difference. It's a more attractive buyer. It made sense for them to buy it. And while he's an egomaniac, or no, you knew the guy wanted to own it. Okay. Here you have an individual, not a corporation, who has regularly flaunts the law and doesn't even have the money to buy it. He has to sell stock in order to close this tomorrow. So he's insolvent or illiquid, cash poor, if you will. And that makes this much more risky to ARBs. Okay. That door looks massive. So that's a huge door. It's true. It's a big door that does nothing with sound. Okay. I built this office a few years ago, and I don't know what I'm doing apparently because this office is not soundproof, even close to being soundproof. And I don't know, there's about a million reasons why I fucked up the construction of this office, but I got a cool big door. It's true. Do I have any law background? Well, Daniel, I'm Jewish. So my ancestors have been practicing for millennia. But no, I'm an idiot, as I like to say often. Yeah, I know nothing about the law. I haven't even read the Twitter merger agreement. I don't find any, I don't think that's very helpful. I know what it says. And, I base my opinions on what people that are much smarter than me that do have a law background, and do understand how merger agreements work. And I've been doing this for years now. But anyway, sorry, I got to go. Going to leave the question for later. It seems like Elon winning in court is practically impossible. Is it possible Elon goes all the way and we could get screwed by the remedy? Yeah, so I already addressed that. There's a chance that the judge says, I'm not going to force this guy to close. I'm just going to charge him $1 billion. Seems like he feels he's doing a public good by buying Twitter. Another thing the judge can do, by the way, is say, I'm not going to make you buy Twitter, but I'm going to fine you $25 billion. That's what I think the fair value is of what Twitter's worth today versus what you agreed to pay for it. It's definitely possible that the judge does that. And then someone will say, well, he's just not going to pay. He owns massive assets in the United States of America. They can confiscate the assets. It's courts. Courts figure out a way, okay? It's not the SEC. And it's not tweeting about Tesla. And it's not some case about suing some guy over being a pedophile. Can you describe what benefits you get by doing these videos? It's very cathartic for me. I like being able to have the camaraderie of being able to talk to people about my ideas. I've always liked the community on Twitter for the last decade, which is why I tweet so much about my ideas and my positions. This to me is just kind of like a natural progression from that. I get nothing out of it. I don't get any ad money, obviously. I never thought I'd ever do anything like this. I only do them when I want to do them. I think it'll be fun one day to show my kids some of them. I mean, at least it'll be proof that I did something during the day as opposed to just watch Price is Right. So yeah, as long as I get joy to doing it, I'll keep doing it. So that's why I do them. Strine. I have no idea what strine means. Is strine there? What the hell does strine mean? With Twitter, it'd be strategic for a price cut after everything else is done. Right now, does everything in the background stop? No, they'll keep doing everything they can to get all the checks done so that if a court forces him to close, it's closable. They will not. They'll do it in parallel. It'll be in parallel. Now, if Elon does not comply with whatever they need to finish the regulatory and to get the proxy filed, it's just going to make a judge even more pissed. He's just flaunting law. So, you know, I'm not concerned about that. I assume that the rest of the process, which isn't that much left, they have to get the proxy. They've already got comments from the SEC for the proxy, and then they're going to have a shareholder vote. I assume that when the shareholder vote happens, the rest of the regulatory will be over anyway. What would you think if A, Elon continues tweeting, B, Elon completely stops tweeting? I know small factor, but I'm interested. I don't know. People want Twitter to block him. And at this point, I don't think any of it matters. Elon tweeting, Elon not tweeting. It doesn't mean anything to me. Yeah. He didn't tweet for those 7 or 8 days, right? I thought that meant maybe they were going to do a price cut. It ended up meaning he was just going to sue, saying I want out of the deal. But and then he also tweeted from the Vatican, so it wasn't like he stayed silent until they filed the SEC filing. So Elon's going to do Elon. Is there a precedent for a person being forced to buy a company? There's no precedent for a person trying to get out of a multi-billion-dollar transaction, Daniel, that they agree to buy, and they have no legal reason to get out of it. So there's no precedent for anything that's happening right now. But I don't think a judge is going to care that Elon Musk was operating as an individual versus a company. In fact, I'm sure an LLC acquired Twitter. Probably wasn't even him. It was Elon Musk LLC, whatever. Because he's not buying it. He has a consortium that's going to be investors and whatever. No judge is going to say, oh, woe is Elon. She's worth $200 billion and he overpaid by $15 billion. No. It's the end of rule of law in Delaware if they do it. And why don't you go Google Court of Chancery and see the people that are on the bench that are going to hear the case. These are serious people from serious law firms that all they've done in serious colleges, and all they've done is, merger law. They have no reason to let Elon off the hook. Okay. Is there evidence that he doesn't care about Tesla's share price? He has tweeted before that Tesla's share price is too high. I don't think there's any evidence of that. I think he definitely cares about Tesla's share price because he needs to fund this. He needs more money out of this. Another cynic view is Elon only bought Twitter to sell Tesla stock and then to get out of the deal. You guys are giving this guy way too much credit. He definitely probably wanted to diversify out of Tesla. So he probably thought pretty good to take some of my Tesla money and move it into Twitter. But Elon didn't know that the stock market was going to crash in May and that he was going to massively overpay for this. He's a really smart guy, but he definitely doesn't have clairvoyance. So no, I think he probably did want to diversify to Tesla, but I don't think he was selling the stock knowing he was going to try to break out of the merger. He didn't sign the deal in April to then think 4 weeks later, I'm going to say there's a bot problem. They're lying about the bot problem, and I'm going to try to get out of it. You're giving Elon way too much credit. It's too much money. He's got buyer's remorse. It's fine. He overpaid by a lot. Considering Elon has 88 billion of margin loans, and I'm not sure that that's publicly known, the amount of margin loans he has, Tim. I would like you to show me the source. If anybody knows the amount of money he has pre-deal. I just don't think that's correct. If Tesla stock, it doesn't make any sense, Tim, why you'd have 88 billion of margin loans. SpaceX and his other startups, he probably spent a few $1 billion at most in capitalizing them. And unless he's bought a country, where would his $88 billion go to that he borrowed against Tesla stock? It has to go somewhere, to assets. He's not putting it all on caviar and cocaine. So I don't believe that number is correct at all. He probably has, in the single digit billions in margin loans is my guess. But again, please show me where the source is for that. If Tesla stocks drops a lot, which it should, then is there a risk he can't afford to close? What do you think of that risk? I think that the court would order him into bankruptcy. He'd have to declare bankruptcy and lose all of his money. Really? That's not a condition. A condition isn't that it's unfair to make him sell his Tesla stock out to close. He'd have to sell SpaceX. The court would tell him to sell SpaceX, the whole company, to close. Doesn't matter. That's not how it works, right? I can't go to a judge and say, I can't close on this house, Your Honor, because, well, I borrowed a bunch of money for, it's kind of stupid, but I really like helicopters, and I bought a bunch of money to buy a helicopter, and it's in my backyard. I have a loan against it. I don't have the cash to buy the house anymore. I just had this really great helicopter. Oh, okay, Mr. Turk. All right, he can't buy the house. He bought a helicopter. But Judge, can't you have him sell the helicopter to close on the house? Oh, that's an interesting idea. So he has assets. He's just a liquid, just like he was before he decided to buy the house. Because that's what you're saying, basically. Is Tesla going to go to zero? Tesla could probably go to zero, and Elon could still have to close. They'd have him sell SpaceX. Many fear Elon convincing board or court he's willing to endure much more pain than them, so they blink first. Following that logic, as Elon's moves so far have been painless, zero downside. Jason, that is exactly right. In fact, Jason, not only is it zero downside, it's been all upside. The guy's a narcissist. He loves this. The world is talking about him every day on his favorite platform, the platform he just tried to buy. This is fantastic for him. He either gets a price cut or he doesn't. He's out the 200 million max law fees based on both sides' cost over the next 6 months. People love this. He loves this. I do believe that that the board would blink, but the board would blink after he would close. So you'd have to have all the regulatory done. And the board would probably settle for a few bucks. Why would the board settle right before trial if the case is so strong? Well, Jeremy, I think they would just settle for a few bucks. I didn't say that they wouldn't settle for 45 or 47. They would definitely see the verdict at that point if it got within days before. I think that the board is probably asking the same questions that we're asking. Is there a chance that this judge doesn't order him to close, but just fines him? It's very, very unlikely, but the board might not want to risk that. The board has a lot of other things they have to worry about. The business is plummeting. Employees are nervous. And the longer this goes on, the more turmoil at Twitter. And if this doesn't close, the board is then left with a beaten down company and shareholders are fucked. And it's Delaware. Twitter's based in Delaware. So their main constituent of the board is the shareholders. It's not the employees, which, by the way, people say the employees are really upset, very angry, whatever. Employees are one of the biggest shareholders of Twitter. I can assure you that they want $54.20 just as much as you and I do. So I'm not concerned about the employees convincing the board to cut bait now. And if the board was going to cut bait, we might have already heard about it. Now, yes, they'd be incentivized to keep publicly saying that they're going to go the distance so they get the most they can get out of Elon. But I would be very disappointed and very surprised if they settle with Elon for a few $1 billion. We're not even sure Elon would agree to pay a few $1 billion termination fee. By the way, in this game of multi-dimensional chess, 4-dimensional chess, Elon might rather close with a price cut than he would paying a $3 billion fine or fee. So we don't even know Elon's okay with paying a breakup fee, a multi-billion-dollar breakup fee. There is no way the board agrees to a $1 billion breakup fee. That number doesn't mean anything in this situation. Okay. So I think it's very unlikely you'll get to a situation where the board agrees on a cut. I mean, on a payment, a jack. Is Twitter incentivized to go through the court because Elon do the same thing with the settlement? What do you mean, Daniel? No. They wouldn't settle until after everything is done from a regulatory standpoint, and they'll close within a day or two or a week after. That's why they would wait to settle. They would never settle today. Elon could just say, I want another price cut. There is no incentive for them to settle today. Why is this expected value calculation not just a fancy form of guessing? It seems these probably just pulled out of thin air. I mean, this is literally what we do for a living. I break kids' legs. That's literally what merger arb is. You take any deal, where it's trading, and what the merger price is. You look at what interest rates are at. You look at how long it's going to take for the deal to close. And then you look at what the percentage is of the deal closing. And then you look at what the break price is if the deal doesn't close. And that's literally all you do for merger arb. So if it's all just guessing, and gambling, then you shouldn't do merger arb. But that's what all stock market investing is. It's coming up with earnings estimates. It's coming up with probabilities of different earnings estimates years out. It's coming up with what interest rates could be, what discount rates should be. That's literally all of investing. Everything is coming up with estimates of the future, discounting them back, and seeing whether or not today's price is fair or not. So with the odds I just did, this is the beauty of the stock market, can take all of those odds I just did and change them. So if you think there's a 50% chance this breaks and a 50% chance we either win or settle, well, you're not going to get that good of a stock price today at $35. But you have to decide how strong the case is, how strong the incentives are for Twitter, for the judge, and then for Elon, and make up your own assumptions. And when I do it, generally speaking, I think the odds are overwhelming in my favor. I do this with every investment. Go back through all my videos. Look at AXSM. That's going to be approved. And that's just a case of odds. I estimated there was whatever, an 80 or 90% chance that the drug was going to be approved, a 10 or 20% chance it wouldn't. It was $10 down and whatever, 50 or 60 up. And it was a good expected value. I do with everything. I did it with BMYRT. It was the same thing. That one, we'll never know whether my odds were right or not because it didn't work, right? When it doesn't work, it sucks so much. It doesn't matter whether or not you'll never know if you're right in hindsight, right? It's a discrete binary thing. And I was wrong with BMYRT. It's flat out wrong. It was either 0 or 100%, and I got 0%. Did not get approved by December 31st. And it's not going to be replayed 100 times. So I'll never know what would have happened 100 times. I won't know 100 times over if the FDA would have inspected those facilities, or if when they inspected Lonza, they would have approved it by the end of the year, and all the different ways I got fucked in that security. Chris, Strine is at Wachtell, greatest DE chancellor of all time, the absolute ideal firm for Twitter on this case. Great hire. Thanks, Chris. Yeah, I didn't know the name of the guy, but yeah, the lawyer that they hired Twitter is the former chancellor of Delaware. They hired the axe. Why not? Elon's going to pay for it. How ironic is that? Elon's going to pay Twitter's lawyer fees whenever they settle this case or they win. Hire the best in the business. Can you open your Twitter DMs? Account is already private. That's interesting. I'll let you tweet at me, SC358. Oh, I don't know who you are. Just at me, and I'll follow you so you can. I don't really want everybody DMing me, so I get a lot of shitty DMs. You'd be surprised. Even with my private account and my very small number of people that follow me, I don't like DMing with a lot of people. I like this, and then like retreating to my hole. He has already borrowed against 88 billion in the Tesla stock and opposed it. Okay, well, Tim, that is not what you said. You said he had an 88 billion margin loan, Tim. Borrowing against 88 billion of Tesla stock means he's borrowed against it at a percentage, a fraction of that 88 billion. So I think he borrows 20 cents on the dollar, I think I read. So maybe he has, 16 billion or 15 billion or whatever the hell that math is in borrowings against the 88 billion. He's worth 200 billion. So even if Tesla fell 50% tomorrow and SpaceX was still intact and the cash is already raised, he's got plenty of money to close in this Twitter deal. It is not a risk. The irony, and this is truly ironic, is that he did have in the merger agreement that he had to have a margin loan taken out to fund the equity component of the Twitter deal. And if Tesla fell so much that he could not get a margin loan, he would have had a legal way out of this deal. And he would have had to pay $1 billion fee to do that. He changed the merger agreement in May to eliminate the margin loan. So no matter what price Tesla goes to, he cannot get out of the deal because he no longer has the margin loan anymore associated with it. It'll be ironic if Tesla goes to $100. I guess it's not ironic otherwise. I don't think Tesla's going to $100 anytime soon, Tesla Q. I think we're okay, in the near term. But it won't matter anyway. Point is that you become unsecured creditor on any judgment. So if judgment is 10 billion, you get something less. Again, Tim, he's worth 200 billion. SpaceX is SpaceX position alone is worth whatever, 50 or 75 billion. And I'm not concerned about it becoming insolvent and in bankruptcy. But fuck, if the result of this is Elon Musk going bankrupt and losing everything he has, I mean, that would be a pretty cool outcome. I don't think that's going to happen. I believe in the rule of law. I am betting against Elon. So that's a great way to, we won't wrap this up, but that's a great way to put this all in a big bow, okay? If you don't believe that a merger agreement can be upheld in the state of Delaware that is completely black and white with no gray in it, that somehow Elon will figure out a way to get out of it, either through the board folding or a judge scared of Elon Musk not ruling in Twitter's favor because they're worried that Elon's going to flaunt it, you cannot own the stock. Though, if you think Elon Musk is a rational actor, and everything he's done thus far is rational, by the way. He has not done anything irrational yet. He's going to get a price cut by his childish antics. And the rational move is to settle before trial at the best price cut you can get. So if you think he will be rational, it doesn't even matter what you think a judge is going to do. You just have to make sure that Twitter doesn't cut bait because Elon Musk will settle. So you have a lot of ways to win here, even with some people being irrational. Dude, this is what stock speculating is. You're betting on your own ability to estimate probabilities and guess future prices. Yeah, I don't even know why I wasted all that time on that, Daniel. But I guess I was a little annoyed that he even asked me that I'm just throwing out probabilities there. That's literally all we do for a living. That's the entire stock market, is coming up with future estimates and probabilities of those estimates and the odds that they come true today in the future. The Reuters article points to regulatory filings. He has always had huge margin loans. 88 billion seems high. Point is that there is some risk. I like this trade, but this is risk I am trying to think myself through. Tim, that's the least of your worries. If Elon Musk becomes insolvent and bankrupt due to his SpaceX and Tesla holdings going down so much, that to me is not even a 1% a risk here. So I'm not worried about that. Wow. I think we're done with this, but I want to talk about Magnachip and Kohl's. It's already been 1 hour and 11 minutes. I'm going to pee and I'll be right back. And then we'll talk about Magnachip and Kohl's. Give me 1 second. Oh, all right. That was fun. I think I covered everything. I feel pretty good about that. I was pretty exhaustive about what the risks are, and everybody's kind of, yeah, I feel good about it. I'm going to post this video to Vic and say, all your questions are answered. It's in a short hour and 12 minutes. Magnachip. Okay. So there was an article on Friday that said that LX has finished their due diligence and they're going to decide, they're going to give their report to the chairman of LX, and the chairman of LX is going to decide by July 15th if he wants to acquire Magnachip. Look, the odds of Magnachip being acquired by LX in this environment is low. 25% seems aggressive to me, okay? Even if LX wants to buy Magnachip, LX Semicon has plummeted. It's trading at like 95,000 won. It was 140,000 won when they were doing the original bid. And the market cap of LX Semicon is now below what Magnachip would be acquired for at $27. Now they have the capital to do it, and Magnachip has plenty of cash to fund a portion of the deal themselves. But I'm skeptical a deal happens. I'm optimistic, cautiously optimistic. I haven't sold any of my stock. It's like a 32% position. I just would be shocked if a deal happened in this environment. So I'm happy that there's still articles coming out. I'm anticipating we find out that it won't go through. On the positive side, you're dealing with a super rich Korean conglomerate, and it's just one guy's decision, and that one guy can say, I want to do this. And Magnachip, of course, has to agree to the price. And I don't know what the bid ask is anymore with what's happened with the stock market and semis, but it could still happen. Okay. It could still happen. It could happen on Monday when we wake up. I don't think it will, but it could still happen. So that's Magnachip. If there's ever any more articles that come out that are more concrete than the one that came out on Friday, I'll do another YouTube. But for now, we're told July 15th was the deadline, and he's going to get the report. And it said he is in charge of deciding whether to go forward. So take it all for a grain of salt. It says that they could fund it themselves with their 600 trillion won. That's just not true, or 600 billion won. They need more money than that. So they have to borrow money. They would have to figure out another way to fund it. The article also says that they've rejected multiple financial investors, also that it would be an unfulfilled dream come true for the chairman. They've been saying that for a long time, that the chairman wants to own Magnachip. That's not new at all, Paul. And I believe that definitely to be the case. I just don't know whether the math works, right? This is not Samsung buying them. This is a smaller company that doesn't necessarily have the financial means to pull this off in this environment. It didn't say they rejected multiple financial investors unless you speak Korean. The translated version said they did not end up taking financial partners. And that goes against the previous news articles that said that Carlyle was going to help fund them. So I don't know if that's bullish that Carlyle is now no longer involved. It probably means the price is lower, right? Why would Carlyle no longer be involved? It also doesn't mean it's true, by the way. This is not some like New York Times or Bloomberg source. This is like a schlocky third-party Korean, third-tier Korean newspaper. So this is not the original newspaper that broke the previous Magnachip deals. This is not the one that broke the Wise Road deal and broke the Foundry sale. And that one was also back in May and April corroborated that LX wants to buy them, but that's not the one that came out on Friday. Daniel, pulling numbers out thin air is not what everybody's doing. Investing, I'm talking about the frivolousness of the numbers pulled. It's not. I don't believe it's frivolous. Frivolousness. Frivolous. But anyway, I've said enough about how I think about investing. So I don't know what to tell you. I break kids' legs. So that's Magnachip. On Kohl's, I remain still pretty big there. I haven't sold any. I bought more. Huge amount of out of the money calls traded in August and September. Huge amount. And only reason why those would trade is if somebody thinks there's a chance that the deal comes back together. I mean, tens of thousands of contracts, $37.50 and $40 and $35 strikes. It ain't going back up there on earnings. It's only going up there on a sale. So somebody else obviously thinks that I could be right, that in the next 4, 6, 8 weeks, if the credit market's firm, which the market got much better last week, that this deal can come together. And I think there's a decent chance that Kohl still gets sold. And we'll see. So, yeah, that's it with Kohl's. Tons of out-of-money calls. One thing I wanted to say last time, which I didn't say this time, was the reason why Kohl's is so attractive at $27 or $28, $29, whatever it's trading at today, is that Franchise Group was going to pay the $8 billion, and they're only putting up $1 billion of equity, and they were borrowing for that $1 billion of equity, but it was $1 billion of equity that was going to be recourse to the public company. Okay, the other $7 billion, 5 of it was, or 4 or 5 of it was going to be sell lease back, right, to the real estate, and then 2 or 3 of it was going to be subordinated debt from Apollo. The way to look at the company now at the current price is the market cap today is, I think, like $4 billion, right? It's basically half. hold on. It's basically half what they were going to pay for it at 60. 3.75 billion, 4 billion. In a better financing environment, nothing I'm saying here is not true. It won't happen, but I just want to be very clear what the situation is. In a better financing environment and a better, macroeconomic environment, Kohl's could replicate the exact same situation. Okay? They could put up 1 billion of equity and then borrow 7 billion against it on the assets of Kohl's. How would that look like? And what does that mean? What am I trying to say? So at 3.75 billion market cap, right? What I'm telling you is that you could extract 7 billion of value in cash into the shareholder pockets and still own Kohl's as a levered basis. And that is basically what Franchise Group was going to do. It would be a public private equity, right? In English, what am I fucking saying? You could, in a better environment, pay a dividend to Kohl's shareholders of $50 a share and dividend out Kohl's, the business, to shareholders that would then have done the sale leaseback on all the real estate and have $2 or $3 billion of debt to Apollo. And there would be 1 billion of market cap left, which would be your equity that FRG Group was going to put up recourse to their company. The point I'm making is to show the extreme value of Kohl's at $3.75 billion. There's a huge margin of safety. In fact, somebody else brought up to me, it was Andrew, that just the real estate side, they're going to borrow whatever it was, 5 billion against the real estate. That's versus 3.75 billion today. So forget about the Apollo loan. Let's say you want to put no additional leverage on the company. You just want to do a sale leaseback for all of the asset, all the real estate. You could pay a dividend today of $35 or $38 a share versus your $29 stock price, and you will still own all of Kohl's earnings minus the new interest you have to pay on the real estate. So that's the reason why I was so interested in it after it blew up. I think the market is being too short-sighted at the underlying value of the assets, and I think that all you need is you kind of have an option. Maybe it's a $4 or $5 down in a draconian scenario. I don't think Kohl's is going to business tomorrow, and $25 up. So 5 down, 25 up. 20 up. I don't even think, they offered $53 and Kohl's did not counter. So there's a chance Kohl's, the FRG would have been fine with the $55 price. I guess we'll see. Did you read anything in the fact that they only started the accelerated buyback after the quarter two earnings in mid-August? Paul, that is a great question. So somebody said they were worried. It's okay. So to repeat the question, when Kohl's broke this deal, they said they're going to do a $500 million accelerated repurchase versus the 3.75 billion market cap after they report earnings in August. And the questions I've been asked is why? Why not do it today? Why wait till after earnings? Does it mean earnings are going to suck? Well, they gave us sales, and sales deteriorated rapidly in June, right? I think they were guiding for mid-single digit declines for the quarter, which is May, June, July. And they now raised it to high single digits, which means that June is worse than high single digits, right? To get to mid-single digits, you have to assume May was probably mid-single digits. Not that it was going to get better in June and July. So I don't think that they were waiting for a cheaper stock price to do the accelerated buyback. I think that they decided from a legal perspective that they're blacked out, and they would not, since they didn't disclose earnings, they only disclosed sales. They weren't at a window yet that they could implement the buyback. There's a chance that they did that because, they wanted to remain blacked out so that they could possibly renegotiate a deal. There's a chance. I don't know. Maybe that's why KSS bailed on FRG. Based on what I said, Glenn, that they could do it all themselves, I don't think they're going to do it all themselves. But I do think that FRG highlighted how attractive it is, right? If you can line up the Apollo financing and you can line up the sale leaseback, why shouldn't Kohl shareholders still own the company? Let's have $1 billion market cap right now that does $500 million of annual free cash flow, right? It'll be trading at 2 times free cash flow or whatever it is. And let's see what happens with Kohl's stock. Guess what? It would go up a lot. It wouldn't stay $1 billion market cap. And that's what FRG was telling you with their stock price. FRG was going straight up because they were getting a great levered recap on Kohl's. It couldn't get done at 60 because nobody quite understands. Kohl's wasn't transparent about it, right? Kohl said that the financing wasn't in place. I believe them to be true about that. I don't know what extent it was in place or how close it could have been in place, but they wouldn't have put in the filing that it wasn't signed and definitive if it was. I don't think they would lie about it. But they also made it very clear that they didn't really like the $53 price. And they did that on a video on CNBC. So, your guess is as good as mine. But I can tell you this, I am without a shadow of a doubt certain that FRG would buy this tomorrow for $50 if Kohl's would agree to it. The only question would be is whether the financing is there. And as the stock market firms, which has been firming, and the debt markets firm, I think that the financing could be there. So let's see what happens. But I feel like it's a very, very interesting situation. They also did not take their 22 guidance down. I thought that was interesting too. Why not kitchen sink if the numbers are so bad? One analyst saw this as a negative, but to me, it's a positive. I think that management is widely hated, and people thought when they guided in May, the numbers were all bullshit. They were too high. I'm not just saying that in hindsight. People thought there was no way they hit those numbers. So I think that the board and management are in a really tough place right now. They were already hated. They lied during the proxy about their business. So they didn't have the activists take over. And then they blew earnings. They fired 2 of their 5 executives. And this is a board that needs to figure out a way to make this stock work. And they will figure out a way to make it work. I strongly believe it. So I don't know how long I'll be around with Kohl's, but it is funny how sometimes things are better after it all goes to shit, right? I mean, the Zendesk thing was a disgrace, but I couldn't come up with a good reason to own Zendesk at $50 or $60, whatever the hell it was at before they took it out. And then they got bought out for a 45% premium. So to me, that's what Kohl's is here. And it could happen pretty quickly, right? FRG's already done its due diligence. So you just need the financing markets to come around, and you have them come out with the right price. You have to have the right price. I mean, call it even 800 million normalized free cash flow, accrete to both parties. Don't understand the macro could scare whoever's underwriting. I don't know. I'm just getting my feet wet in M&A. The business is deteriorating pretty rapidly. So the narrative that Kohl's just spits out, solid free cash flow year after year, I get it. Except for COVID, it was pretty true. But the business is secularly challenged, right? No one could argue that Kohl's the business you want to own 20 years from now. And then on top of that, you're now entering into what's likely a recession. So this is not usually the time when people do levered recaps. The worst part of the cycle, right? So I can see there's a reason why we don't see lots of M&A happening right now, let alone, struggling retailers. And the last thing, SHLX, I don't know why Glenn's asking me that because he knows what my views are. I think SHLX will happen any day now, any week now. Nothing's changed there. It's my biggest position. We'll just see what the price is. I'm not at all concerned that the deal breaks. I'm not concerned about a take under. My worst case scenario is that it's 20 or 30 or 40 cents more than we're trading at right now. Honestly, that's my bear case scenario on SHLX. I hate when people do that. One of my biggest pet peeves on VIC or any write-up is when they do bear, base, and bull, and the bear is like 20% higher than it's trading at. Fucking hate that. But with SHLX, I actually believe that. My bear in SHLX is the stock is flat the day they announce the deal. It's for a premium of a few percent, and the stock doesn't do anything. That's my bear case. My throat hurts. This was fun. Thank you all for coming out on a Sunday. I wanted to do this today because the Twitter thing is so big, and I didn't want to do it after the market opened. So as far as trading goes, I was buying it huge. My average price was 34.20 in after hours, and I don't know what it's going to do on Monday, but I think this was the event that everybody was waiting for, and arms will buy and shorts will cover. I could be wrong. My downside, I think, is 33 and versus 35 or 34.20. I was fine with taking that kind of sweat for the kind of upside I think could happen. So that's why I think it's too low. And we know the company's not going to cut and run anytime soon. If the company does do it, it's going to be months from now or many, many weeks from now. And it's very unlikely. But that risk is off the table. They're suing him, and and we don't have to worry about that headline risk. So, all right. Peace. Really, thanks everybody for coming out. Appreciate it. Take care. Have a good Day No Goche Sunday. Cheers.